Hello everyone and welcome to Day Trader S&P 500. Today is Monday, October 4th, 2021. This is Dale Woodson, editor of Woodson Wave Report, and we have some exciting things today for sure. And it should be an exciting next few days and maybe 2 or 3 weeks. But we're gonna go right into our October monthly report that we sent to our subscribers Friday, 19 pages worth. I want to point something out here to you guys real quick. We'll get into this a little bit later, but let me see if I can get down to what our customers were looking at on Friday. We'll get to that later too. Right here, okay? The turn dates, okay? Since the S&P recorded a new low on Friday, this went out Friday, October 1st, that could be the low. However, we must allow for a possible lower low on Monday, October 4th, as that day is closer to the actual turn date of Sunday, October 3rd. You know, we had a turn date of October 3rd, so the market put in a low on Friday, and Friday we put this out. We said, hey, we got to allow for it. That's the closest it can get to the turn date is Monday, because the turn date is on a Sunday. The trading day before is on Friday, and the trading day after is today. So let's look at the chart here, and we'll get to more detail on this. This is a 10-minute chart of the S&P, but here is the October 10th low, and here we breached that low. That's important for so many reasons, and we'll get into that. But one thing it did is it verified our primary wave count, and it also eliminated the bull count, which was, I might spread this out a little bit here for you guys. It was 1, 2, 3, 4, and then 5. But if that was a 1 up from that low, that was the bull count. You may remember we had that in purple. The second wave down cannot retrace more than 100% of the first wave, and it did. Okay, so that's what we were looking at there. But let's get into our morning alert this morning, if I can. Let's see. Okay, here we had a morning alert. Wave 3 of 3 verified, another direct hit. Okay, since that, let me get into it. Scroll down here. Since that held, that 43.76, which was hit last week, I think it was Friday, within one tick of our target, another direct hit. The S&P broke below the 10-1 low, as we mentioned before. That verified our primary wave count, and our targets here remain the same. They've been that way for a while, 42.25 and 40.76. We have more of them for what it's worth. That's just a little sample of what we have for our subscribers. I want to let you guys know about our subscription services there. We have annual, monthly, video on demand. All three of them guess the closing price to the S&P and win a free subscription to everything we have. I also don't want to forget about our awards and our disclaimer there. As you guys can see, been around for a long time. And I want to thank you guys for subscribing to the channel. Remember to hit the reminder bell and the like button. And it looks like, bear with me here, guys, like the like button. Okay, thank you guys, really appreciate the patronage to the channel. Okay, let me get rid of that, and we'll get into let me get rid of that too. Okay, we'll get into some picks here real quick, and then we'll get into more detail of the chart. Okay, let's see here. Yeah, I wanted to let that back in September 23rd, we were still looking for this 42.25. This count has held through the test of time. You can see our primary count in black and our alternate count in red there. I want to get rid of that. Let's see what else we wanted to show you guys. Let's see here. We've got where's the 10:01? Here we go. And here we can see where the third of third waves, that's usually where the gaps are. You can see we've got a 1, 2 down, and there's a third there. And then we've got a 1, 2 down, and there's a third there. Okay, so that's where the gaps usually occur. And this played out and made a lower low than that one there. Okay, and let's look at that 10:23 chart here if we can. Okay, this one here, I want to show you guys a lot of information on this. But again, we've got a 1 down, 2 up, 3 down, 4 up, and a 5 for 1. And then we've got a 2 up there. It was right at the 50% retracement. And then we've got a 1, 2, 3, 4, 5 down from there. There's where our wave 2 targets were. And our primary count is in black. Our alternate count is in red. They're both bearish. And the former bullish count got eliminated. Okay, so we'll move on. Let me look at this this one from today. It's got a lot of info on it. But before we do that, let's just go to this chart here. Okay, I've got this in detail. You don't need to look at all the minor details. We did start with a leading diagonal. The fourth wave overlapped the first. We have an expanded triangle in here, but you can see we've got a 1, 2, 3, 4, 5 for 1. We've got a second wave retracement right at the 618. Then we start a new wave, a new a smaller degree of trend, if you will. Okay, a 1, 2, 3, 4, 5 there. There is the first degree in purple. I tried to put them in different colors for you guys. There's the next lower degree in red, and this did a perfect 50% retracement right up on that October 1st turn date, excuse me, and it looks like we're starting what could possibly be a third wave decline at 3 different degrees of trend. We have a turn date of 10/6, and I'll get into that here real quick. I want to show you guys here on our October monthly. I'm just going to read this to you guys because it's very important. Okay, let me see if I can get up there on it. Let's see. Here we go. Okay, here it is here. Historically, the 34-day Fibonacci time spiral, and I've been doing this since the 90s, has marked a high, followed by the 55, which marks a low. There's no rule that states that's the way it has to play out, but that's usually how it works, okay? So we might expect a high on October 6th, which is Wednesday, to mark the counter trend high. In this case, it would be a 2 of 3 of 3. When these spirals are broken in the past, it's usually always on the 34-day turn date. Okay, then it usually goes above that high and above the all-time high. Otherwise, we can expect a 55-day low, which is October 27th, to mark a low. There's no guarantee of a panic spike crash low, but if one is to occur, and they are rare, that date is when it would most likely happen. At least it should mark a low, provided the 34-day or within a day or two of it marks a high. And guess what? We're within a day or two of it already. Okay, so let's look at that 10:04. Here we go here. Okay, I want to let you guys know the primary count here is a 1 and a 2. Okay, so this 2 could still go higher. Okay, even with this lower low, we could have. I want to be prepared for all scenarios. So I always think, where am I wrong? We know where we were wrong here, and this is held so far. We made a lower low. That gave us validation. But we could get, if this is 2, we could get a 1 down and then a higher 2 in an expanded flat, if you will. An A up here, a B down here, and a C up here. I'm just trying to think of what kind of tricks can they play to take most of people's money most of the time. Okay, you can see our targets there. Right there, but that's what's playing out. So we're looking at 1, 2, and then 1, 2, and then 1, 2. 3 degrees of trend. We're setting up for a wave 3 of 3 of 3. I want to show you guys also on our monthly, not on our monthly, pardon me guys, let's see here, on our special interim report that we put out here. Here you can see there is that same chart, okay? There is a 618. Retracement for 2 there. There's a 50% retracement, 2 of a lesser degree. Then we got a 1. We might expect this 2 to top tomorrow or Wednesday, or the market could just blow right through it and say, hey, it was already marked by that, which was a 5-day slippage. So a lot can happen, but you can see our targets here, and I think I listed all the multiples. I didn't put them on the charts, but I did put them in there. Let's see if I can get to it there. Here we go, right here. Okay, you can see these degrees of trend. The smaller wave 3, I got the 1.618, the 2.618, the 3.618, the larger wave 3, the 1.618. I don't have to read these to you guys, but I listed them all because third waves are the strongest and most powerful, and they can take on any Fibonacci multiple that they choose. So this is a critical time. We'll see what happens over the next 2 days. I want to allow for a possible bounce up, and then we'll see if it takes off from there. I did want to show you guys something else here too. Okay, wanted to touch Tesla really quick. We just did this the other day, but you can see I left the drawings up here, or the marks. We had a 786 right here at 807, and the high today was 806.97, within 3/100ths of a point of perfection. Okay, like I had said the other day, this should top out at the 786. There's no guarantee, but if it blows past the 786, it's probably going to go to new all-time highs, and that bullish count would be in play. I don't have it on here, but we'll see. Oh, you can see right there, the post market is already down to 781. We'd have to look at the internal 1 minute and 5 minute counts to see if we have a change in trend in the post market, or possibly tomorrow. So we'll see where that goes, okay? But here's the operating wave count, 3 different degrees of trend. We have a 1 down, a 2 up, another clear 1 down and a 2 up, and a possible third 1 down and 2 up. And when that pops, we're looking at wave 3 of 3 of 3. Watch this number here. Watch for wave 2 to go up to possibly here in an expanded triangle. And this is pretty much a make or break right here at the 44.65 wave 2. If this is 1 down, then that 2 up cannot go above there. But since this broke below there, that looks like the market has showed its hand. Okay, that should do it. Should be an exciting couple of days. And until next time, take care, everyone.